What's going on, guys? Philip at Trade Genius. So this article out on Cointelegraph talks about state-backed German bank says Bitcoin will leap to $90,000 in 2020. And it's the first time I've seen an institution talk about some of these really high valuations. So I thought we'd dive into this article and see where they're coming from.
Trade Genius.
So the German bank Bayern LB has published a report on Bitcoin versus gold in which it predicts a big leap for the cryptocurrency in 2020. The financial institution explained that gold had to earn its high stock-to-flow ratio the hard way over the course of a millennia. Bitcoin, on the other hand, will most likely succeed to obtain a similar stock-to-flow ratio to that of gold in the coming year. So we did a stock-to-flow video, guys. We showed you that. We're going to look at a chart here in a little bit. But that's an important factor. You need to understand that concept because the way Bitcoin is unique to any other commodity, right? It has a built-in deflationary mechanism, and it also has a finite amount, and it's transparent. So because of that, you can get very exacting valuations, and we'll look at that on the stock-to-flow chart. You can also check out a previous video on stock-to-flow. But stock-to-flow ratios are a way to quantify the hardness of an asset. Historically speaking, it hasn't invariably been the commodity with the highest stock-to-flow ratio at that juncture, which has been used as money because this enabled the best value transfer over time. Okay, so this is currently what Bitcoin is becoming, a store of value, larger transaction transfers. Going on, they conclude that the stock-to-flow ratio on Bitcoin is going to increase, and you'll see that in the following chart. If the May 2020 stock-to-flow ratio for Bitcoin is factored into the model, price of around 90,000 emerges. This would imply that the forthcoming halving effect has hardly been priced into the current price of approximately 8,000 USD, which we're a little north of at the moment. But that's true. That's one thing that I think escapes a lot of people. First of all, not understanding the stock-to-flow ratio and how that's played a part in commodities historically, but also that Bitcoin, you can see exactly when that's going to change. And the next change is going to be on par with gold, except that Bitcoin is much more finite. Now, on the other side of this bullish opinion is the opinion they call out of Peter Schiff. And if you don't know who that is, he's a big gold bug. He's been selling gold-related products for a long time. He bashes on Bitcoin quite a bit. And he was saying that this drop from 9,700 to a low of 7,990 was a start of another down leg that could go down to 4,000 or lower. And when Bitcoin's going up, he's dead silent. And when it's going down, he pipes up. And, you know, Bitcoin cuts into his business model. And the other point of that is the chart. If you look at the chart, and we can look at that. So he's talking about this breakdown here. But, you know, that, first of all, we're in a different part of the halving cycle. We're approaching the halving. So the breakdown happened here. If we look at, you know, this is falling in this mid-span between these halvings, these red lines. If we go between the mid-span of this halving, you know, you'll see price does break down. As you're inching closer to halving, though, so if you're in this zone, price bottoms out and price starts going back up. We had a similar thing that happened here. Price comes down and then it starts moving forward toward halving. And so that's basically what we've seen here. So what's happened here is different than what happened back here. We were still in that bear market. That cycle had to finish out and capitulate. And now we're back above the 50-period weekly moving average. And same thing over here. So different part of the cycle. And the other thing is that if you think that that level is going to be a big lid, Bitcoin doesn't really care a whole lot when it's in the mood about resistance because it looks a lot similar to what we saw here. So a lot of people are looking at this down move here thinking that it's the same, but it's not the same because of where we are in the cycle. And when we did come back above this level, you notice Bitcoin didn't really pause too much over here. Just kind of ran right through it. Maybe tested it from the top side here real quick and then moved on. And I think that's going to be very similar to what we see coming forward. So that's the difference there. And I think he doesn't take into account the power of the halving cycle. Now, that out of the way, let's look to stock to flow. So this is stock to flow. And I'm going to just really briefly go over this because we covered this in a previous video. But what they're talking about, this bank's talking about, is pricing in the stock to flow. So when we were in 2012, okay, the stock to flow ratio jumped. And you can then calculate price. So it gave price a fair value of north of $100. And from the time we did the halving in November of 2012, to 2013, that was about 4 months, and we hit that halving fair value price. Okay, and then we go to 2016's halving. Fair value for Bitcoin now jumps to north of $8,000, right? So we're taking the production is cut in half. Now we're down to 12.5 Bitcoins every 10 minutes. That's the current rate of stock to flow ratio that we're in. So about 1,800 Bitcoin produced every day, give or take. It just depends on how the block time averages are. But it took us about a year to meet up with that stock to flow ratio. So you can see price gyrates. Will get overbought compared to stock to flow, will get oversold compared to stock to flow, but it gyrates around this stock to flow ratio. So if we come into next year, now we've got a fair value because now only 900 coins are being produced today, 6.25 Bitcoins every 10 minutes. Deflationary mechanism kicking in. We now have a fair value of near $100,000. So, right now at these prices and knowing how Bitcoin reacts and the price accelerations once it gets going goes very, very quickly. So your chances now is really to get in, start accumulating that Bitcoin, because as we start marching into post-halving, right, we're going to see a big peak. And so when you start seeing the banks starting to admit that this model is a huge factor in the price of Bitcoin, they have reputations, people look to them for confidence. So that's a huge, I think that article, I like to look at the articles that aren't super big headlines, but I think are actually are key pieces that you should be paying attention to because they're important or people in the know are validating this thing. So hopefully you get a chance to diversify. And again, if this is all new to you, you can always join us in the room and we'll help you get it figured out. But this is the kind of stuff this is generational wealth stuff. And if you're smart, put some money to work now before the major adoption happens. And there's so many other things going on in this ecosystem. Blockchain really has not even begun to start being implemented to its full capacity. And once that really starts happening, it's gonna be pretty jaw-dropping. So all right, guys, well, that's it for this video. I just thought I would share that with you guys. Even the banks are recognizing the stock to flow model now, and very, very powerful stuff. Thanks for watching. Please hit like and subscribe. I will see you on the next video. Take care. Bye-bye.
Trade Genius.